Welcome to Money Talk Viewpoint, the podcast for financial professionals, CPAs, attorneys, wealth managers, and trusted advisors who work with high net worth individuals and family offices. My name is Stuart Kruse. I'm founder of Kruse Asset Management, and I'm a TED speaker, and I have a book coming out called License to Steal: How to Turn Wall Street Greed into Your Gain. I'll be your host today on Money Talk Viewpoint. And for those of you who are not familiar with Kruse Asset Management, we're a boutique asset management firm. We are quantitatively focused, and we have a virtual family office where we work in a team-based approach with your CPAs, your other trusted advisors, to proactively look at some areas of opportunity for your finances. We bring in national experts to help solve and take advantage of these areas for you. And you can do all this without the payroll of having your own family office together. Areas like premium financing, buying and selling your business, captive insurance, reducing your tax, advanced estate planning, and the like. If you want to know how a virtual family office might be leveraged for you, let me know and reach out to me on the information you see below. Okay, so enough about me. We're not here to listen about me. We're going to have a great show for you today. And it's all about a very topical piece of topic, not to be redundant, but we're looking at what are the impacts of sustainable energy? What are the impacts of renewable energy? And our guest today, Brian Jones, who's managing partner of Windmill Capital Management, is focused on creating a positive global impact with clean and renewable energy. Brian is a former tax accountant, investment banker, and CFO of a public company. Brian, welcome to Money Talk Viewpoint.
Thank you, Stuart. I appreciate the marketplace.
Yeah, I'm looking forward to this. I'm excited. You know, I hear from a lot of my clients and people in the industry about this type of investing. And really what we hear about, and I'm curious about your take, is we hear about ESG investing, environment, social governance. We hear that term more in the media. Tell me how it relates to impact investing, or just tell me what impact investing is.
So impact investing often gets associated with and sometimes confused with ESG. ESG really is a measurement tool used to evaluate investments in several non-financial aspects, as you mentioned, the environmental, the social, and the governance. And typically, ESG is associated with publicly traded securities, debt or equity securities. More often, sustainable investing or impact investing is associated with private investments where there are specific outcomes, impact outcomes, typically environmental or social outcomes that are expected from those investments, and where it fits within their overall, in terms of value-based investing, where particularly high net worth individuals and family offices can, quote unquote, invest their values.
My firm, where we do a lot of work, obviously, with public companies, but you made a big distinction that impact investing tends to be more private equity focused, or maybe it's debt as well. And a lot of our clients that might be portfolios of $2 to $10 million, they don't necessarily have access to some of these opportunities that, let's say, a family office might have access to. So can you tell me a little bit more about why you think it's growing in such popularity in that space? And maybe it's growing, in the high net worth space too, but talk a little bit more about, that focal point.
Well, I think overall there's greater awareness. The Main Street investor, if you will, there's still plenty of opportunities to invest in impact. There's impact comes in a whole bunch of different forms. There's microfinance, there's education, there's workforce housing, those types of things that are all accessible to to most investors, through their financial advisors. But again, they tend to be more private structures that they have. Our own focus within impact is renewable energy, and our fund is oriented towards higher net worth individuals, family offices, foundations, endowments, et cetera. But there are opportunities for investors of all types and capacities to invest in impact. And I think that one of the best things that we're seeing out of impact investing is managers have better ability to measure and report on that impact. And I think that that's an important it's an important aspect. The adage is, that nothing's important unless you measure it. The measuring what that impact is and being able to report to investors exactly, whether that's in terms of greenhouse gases, carbon dioxide emissions reduced, jobs created, low-income community outcomes, all of those different things can be more accurately measured, meaningfully measured, and reported to investors. And I think that in addition to greater awareness is, are two of the leading factors in why this is becoming more commonplace, more popular.
Yeah, it seems to me like there's a big shift in the investment language, if you will. Like when I was growing up in this industry, before I had all the gray hairs that I have now, it used to just be all about shareholder maximization. Like that was what it was coined. And if you kind of study this, and I wish I really studied this a little bit more intensely, but at one point somebody said that was the goal of any company, was to maximize its own shareholder value, and then everybody else would take care of itself. But now it seems like there's a shift, at least in some circles, where it's not just shareholder maximization. You need to maximize the stakeholder value. So even if the person doesn't own share in the company or in that investment, but they are affected by the investment or the company itself, they are stakeholders in that company. Like maybe they're downstream from a water source, or they're around the air, or what have you. So I think there's been a palpable shift away from just that myopic shareholder value investing and optimization, right? Have you seen?
Yeah, I think that's absolutely right.